Gene, my first question for you is: you look at all the other automakers, and you look at their valuations relative to Tesla. Are they all undervalued?
No, I don't think so. And this is
you think they're properly valued, and Tesla's properly valued?
Well, let me back up. Is that I think that there are pockets for some of these other automakers. Obviously, Ford has done a great job. I think that there can be companies can turn around. They can get a tailwind within this. So if you look at the broader industry, I don't think that the broader auto industry is undervalued. I think there are companies within that. I think you're going to see some companies that have been around for 100 years that will be a fraction of what they are in a decade. And so I think I'm not trying to be cute with the answer, but I think there are pockets where some will surge. But as a net, I think the auto industry is going to struggle with this transition. And just quickly regarding Tesla and its valuation, it is, as someone who takes a very measured approach to valuation, it seems absurd that we're at $1 trillion. And what may seem more hard to believe is I believe this can be a $2.5 trillion company. And let me just quickly frame that in 5 years. Granted, it's a ways away, but this can be, we can go from 70 billion to 400 billion in revenue, a 6.5 multiple on that, which is hardware, software, services, Apple-like multiple, is that $2,500 stock. And so I think there's still room for upside with Tesla. I think we're going to be having this conversation for years to come.
Gene, I want you to react to that, but I want to ask you, I'm sorry, Gordon, I want to ask you a separate question, which is you seem to dismiss the Hertz news. And I think a number of Tesla investors look at that Hertz news and say, you know what, for Hertz to do this, they're going to have to build out a lot more infrastructure. And once you get that infrastructure, you get lock-in. It's all about lock-in. So it's not just a one-time story. It makes it actually much more difficult the next time Hertz has to make a decision between buying more Teslas or buying somebody else's vehicle. They pick Tesla. Do you not agree with that?
No, I agree with that, and I don't agree with that. Let me explain why. So first of all, again, we don't know what the terms are on this deal. Typically, first of all, when an auto company sells to a rental car company, typically that's done from a point of weakness, not strength, because you have to do it at a discount, and you also have to basically buy those cars back after a number of years. Number one. Number two, it's only 100,000 cars rumored. We don't know the full terms of the deal. That's a one-time purchase. That's $500 million. The company has added $200 billion in market cap. And then number three, when you say they have to build infrastructure, all of these charging networks are open up to all cars. So I think that's important. And I want to address what Gene said. When he says just look at the numbers, I would argue the same thing. Listen, in the third quarter, for the first time ever, BYD sold more electric cars than Tesla battery electric cars in China. And globally, in the third quarter, for the first time, VW sold more electric cars than Tesla. And Tesla only sold 241,000 cars in Q3. GM sells 2 million. Toyota sells, 2.7 million. And Tesla, so their sales increased by 41,000 cars, and they're only going to increase those sales by roughly 13,000 cars in the fourth quarter. So you're talking about traditional automakers selling millions of cars versus Tesla selling 241,000 cars, and that growth slowing materially. Market share, Europe, their market share has dropped from 33% to 12%. The U.S., their market share has dropped from 86% to 66% with no competition. And China, their market shares went from 23% to 11%. So when you see competition coming, they're losing market share. So this idea that they have this significant upside, the numbers actually speak completely different to that. So when Gene says they're going to go to millions of cars sold, the numbers just don't support that. And again, when you sell to a rental fleet, any automotive analyst will tell you, Tesla is a car company. It's not a software company. 95% of their revenues come from selling cars. Their other two divisions are hemorrhaging cash and have for quarters. When you talk to an auto analyst, selling cars to a rental car company from an automotive perspective is done from a point of weakness, not strength. So I think they do have demand problems. I think we're going to see that play out through 2022. They have no new cars, and they have a ton of competition coming. So I don't think you're going to see this tremendous growth in their auto sales. And I also think they recognize some of those sales from the Hertz deal in Q3, which is why the numbers surprised to the upside. Let's see what happens in Q4.